Ellie finally has good news. Her cupcake shop is making a profit. But there's one problem. Her bank account is almost empty. How can her business make a profit and still run out of money? So the local cafe has ordered 350 cupcakes. So let's put, there we go, 350 cupcakes. And the sale is worth £700. So she delivers all the cupcakes, but the cafe owner says that they'll pay her next month, and she agrees. So she's made the sale, but she hasn't received the cash. So now Ellie has to think about cash flow. So cash flow, let's have a look over here, is the money in and the money out. It is the movement of money, let's call it cash, in and cash out. Okay, so it's the movement of cash in, and because it's flowing, it's moving, let's call it cash in flow. And then the cash or the money out, and it's flowing, it's moving, we're going to call it cash outflow. Okay, so this month the cash in flow was £0, okay, because she received no money from this cafe owner. Okay, but Ellie had to pay for the ingredients for those cupcakes, so her ingredients cost her £350 and her rent cost her £300. Okay, so the money is still owed to her, but it hasn't arrived yet. So businesses often calculate this as net cash flow, and that shows whether more money, okay, has left or come into the business. So more money in or out. Okay, that's not sales in or out, that's the money in or out. Okay, so if more money comes in, she's going to have a positive cash flow if more comes in. And if more money goes out, she's going to have a negative cash flow. Okay, and we can put that in an equation. So we can say cash inflow take away cash outflow. Now her cash inflow was £0, but her cash inflow, if we add those two up, was £650. So she has a negative cash flow. Okay, it's a cash outflow. So she has made money. Okay, she's made £700 from the cupcake, but she doesn't have the cash. She doesn't have the money in hand yet. So she is out of pocket for negative £650. Okay. Profit is different to cash flow. So profit is whether or not the business has made the money, not whether or not it has the actual money yet. So remember, profit is equal to revenue, okay, take away costs. So in this case, the revenue, the amount the order is worth, is £700, and her costs for the month was £650. So she has made a profit of £50. Okay, but the customer hasn't paid her yet, and Ellie's discovered something important. Making sales is not enough. Timing, here's a little clock to remind you, timing is important. Okay, so what if she could earn more money from every cupcake she sells? At the moment, she's selling them for £2 each. And what would happen if she charged £3? Would it help the business, or would the customers stop buying? We're going to look at that next.